Hi and welcome to the weekly roundup for the week ending Friday the 3rd of September. And we hope that you are enjoying these weekly reports, and please do subscribe to receive regular stock market content. And any questions, please pop them in the comments section below. We'd love to hear from you. And finally, we invite you to follow our free stock market reports on tech stocks, banking stocks and IPOs using the link in the descriptions below. Expectations surrounding when the Fed could move to tighten monetary policy has been the key driver in the markets this week. Last Friday at Jackson Hole, Federal Reserve Chair Powell suggested that the Fed could start tapering bond purchases as soon as this year. However, he also said that the US Central Bank was in no rush to raise interest rates. He said that more progress was needed in the US labour markets. Investors grabbed onto the dovish side of the speech, expecting the Fed to delay a move to tighten monetary policy. The US dollar dropped and stocks rallied on the prospect of cheaper money for longer. Weaker than forecast US ADP employment data supported the view that the Fed could stall on reining in support. The Nasdaq has been the standout performer this week in the follow-through trade from Jackson Hole. High-growth tech stocks, which perform well in low-interest rate environments, surged, pushing the Nasdaq to fresh record highs. The Nasdaq gained 1.4% this week so far. Meanwhile, the Dow, which is closely tied to cyclical stocks, is set to end the week lower as optimism surrounding the US economic recovery cools. US non-farm payrolls are due today and could potentially magnify or even reverse the moves so far this week on the stock market. In Europe this week, it's been much quieter, with both the FTSE and the DAX set to end the week flat. There was very little in the way of UK data this week. The focus in the Eurozone was rising inflation. However, this was played out more in the Forex markets than in stocks. On the exchanges, the US dollar is set to end the week down 0.5%, extending those 0.9% losses from the previous week. The US dollar fell as bets cooled that the Fed would tighten policy sooner, and after weak ADP labour market data. The euro is trading at a one-month high against the dollar, owing to that weaker dollar and as inflation in the bloc keeps rising. CPI came in at 3% year-on-year in August, and that's up from 2.2% in July, and has provoked hawkish comments from ECB members. The pound is set to gain 0.5% against the dollar across the week, adding to the 1% gains from last week. In the commodities market, after rallying over 10% last week, oil is set to end the week around 2.3% higher. Now, oil has been boosted by that weaker US dollar, a larger than expected draw in inventories, and on signs that the hurricane outage in the US could drag on. News that OPEC Plus has agreed to stick with its prearranged output increase was shrugged off the market. Gold has been in consolidation mode after surging 2% in the previous week. The jump higher in gold came following that Federal Reserve Chair's speech at Jackson Hole. Of course, a dovish Fed is beneficial for non-yielding gold. In the UK, house builders have been in focus this week. And firstly, news that house prices jumped by a more than expected 2.1% month on month in August, and that helped to lift the sector. However, the boost was short-lived. Barratt Development dropped 4.5% on Friday, putting losses for the week at 3.5%. Barratt Development have reported a 65% surge in profits thanks to the pandemic housing market boom. However, the stock trended lower amid concerns over the outlook, as of course that stamp duty holiday is being phased out, and with the slower winter months coming. The retailer WH Smith dropped over 5% this week after issuing a mild profit warning, and that was despite improving sales. Now, Smiths, with stores at train stations, airports and on the high street, has seen sales hammered across the pandemic, although those sales have improved considerably over the last 8 weeks. Even so, Smiths warn that 2022 profits are likely to be at the lower end of expectations, and that's due to uncertainty over the travel sector. Now, over in the US, Zoom plunged 13% this week, and that was despite reporting its first billion-dollar quarter. The video communications software provider reported revenues of $1.02 billion, beating forecasts of $991 million. Earnings per share were $1.04, and that was below the $1.16 forecast. However, management warned that growth is expected to slow in the coming quarters as social contact increases. So that's it for the week. As always, thanks very much for watching. Please don't forget to subscribe, and if you have any questions, just pop them in the comments section below. We'd love to read them. In the meantime, from all of us at Atlantic Capital Markets, have a great weekend.